How we doing? Morning, Martin. Morning, Peter. Morning, Lacetron. If I read that right. Morning, John, JC, Christian, Neo. It's time. David, Stevie, Amy. Morning, all. Peter, good morning. What a wake up with DD, but back to normal. Just scaled down, took a little loss, and it looks all good again. That's how it works. Good job. How are we all doing this morning? So we've got a lot to look at with the yens today. Big moves on the yens overnight and yesterday. Bank of Japan is thinking about upping interest rates. Hasn't done it for 6 years. So obviously yen has gone through the roof. And we've just had positive CPI figures on the yen as well, which is obviously even more bullish. So be careful if you've got anything short against the yen at the moment. Or rather, if you're shorting the yen, I should say. Very confusing one talking about shorting the yen because all of the yen pairs are XXX JPY crosses. So when I say shorting the yen, what I mean is I'm going short on yen pairs. But it's easily misconstrued that shorting the yen means selling the yen. But you should be buying the yen. Buying the yen means the yen pairs come down. It's very confusing, isn't it? So everything XXX yen down, not up. But you still will be able to mean revert it, but they're high risk trades at the minute. Morning XR update news, day trader effects. Peter, Virginia, Dallas. Glad I hung in with my Aussie yen sell. Good man. Yeah. So banked a little bit this morning. What have I banked this morning? Aussie New Zealand. So out flat Aussie New Zealand. This morning, look at that. Brokers. Look at that. Drawdown control. Yeah. Sorry. Price. That's over. That's half an ADR. Half an ADR. It's not even that, is it? I think it's even more than that. That's where price was. That's 45 pips. 39 is half an ADR. That's more than half an ADR. It's about 3/4 of an ADR they spread it. Crooks. So it took unnecessary drawdown control on it. But first entry, second entry, 0.5%. So that's banked this morning. That's all I banked this morning. US dollar Swiss weekly range has just been hit. So all I've got on at the moment is New Zealand CAD, Pound US, and Euro Swiss. Not got a lot of exposure on. Got no yen exposure on. I did close out New Zealand yen yesterday. I put this in the Telegram group. No, wasn't New Zealand yen. What did I close out yesterday? CAD yen, sorry. So CAD was the only exposure I had on the yen off of this H1 RSI extension. Reversal alert was in there on 5 minutes. It did go up into nice profit. Target was up at that high. And then obviously that news came in. So this pushed down and pulled back. So I took it off. I posted it in Telegram yesterday. I could have got out at break even on this, but it's just not worth risking it. When you get a fundamental shift like this was a big move down. So we did what? 230 yesterday. ADR is 123, so near as damn it. It's about 175 ADR. When you're doing moves like that off of news, like we got last night, you want out. Just get out. Take the loss. Screw it. Just don't be in it. You may well get out of it, but if you don't get out of it, you could be in it for weeks and weeks, especially with the yen. This is if they are going to put their interest rates up, and I'm still not convinced they will. But if they do, this is the first time in 6 years we've had a positive interest rate on the yen. The money will come in, so it will power up. But it will probably power up as everything else does in waves. Yeah, and as long as it's powering up in waves and they're profit taking on those waves, we have an opportunity to even take it long. So just be careful with it though over the next couple of days because we're going to see a lot of volatility coming into the yen probably. So. We've got 3 minutes to the open. So today's news, obviously, we've had the yen. CPI figures for the yen this morning were better than expected. or higher than expected. I shouldn't say better, higher than expected, which means it's not good for the people of Japan. But for the currency, it puts inflationary pressure on, which puts interest rate pressure on, which means it's bullish. So that's bullish for the yen. Monetary policy, Bank of Japan kept it at zero, negative 0.1, which they've been at for decades, it seems. We've got the CPI coming in for Germany today. This is released state by state in Germany, which is why we don't have a time on it. So at some point, we will have an amalgamation of all the state figures for CPI, which is for the euro. So that will drive the euro up or down. I'm hoping inflation goes up in Germany. Sorry, Germany. But if it does go up, that will help with the euro. And I want the euro up because I'm long on it. So that's coming out. We've got the CPI for Spain coming out shortly in 1 minute, but that's not going to do an awful lot. So the main news we've got today is the Canadian dollar and the PCE for the US. And that's at 1:30 an hour before the market opens. And then we've got revised University of Michigan at 3. We don't tend to hang around for the University of Michigan figures, but we do tend to get a little bit of a reaction to it. So volatility at 3 o'clock. So any trades you're in at 3 on the US indices, just be careful with them. So I just need to open my platform. Right. Have a look at the DAX. Market's just about to open. Aussie CAD 125 over its weekly. So we'll have a look at the yen and everything in a minute and the rest of the news, but the market's about to open. So we've got 13 seconds. So DAX, obviously, huge rally yesterday. All that move that looked like it was going to be a start of a retracement. Screw that. Gone up again. So we are still bullish. So there's your 15-minute pre-market range. That's just broken short. So it's difficult to tell what's going to go on today. Obviously, there's a load of earnings today as well. In the earnings everywhere at the moment. So the stock market obviously is completely all over the place. Just go with the momentum. Whichever way the market wants to take it is probably the way it's going to go. So downside, we've got a tiny gap fill for the DAX. So if we can get down to there at the open, that frees up direction for the day wherever they want to take it. Downside, I'd be watching this high and these highs here. Yeah. So that is ADR basically. So downside today is ADR. Down there. Upside, obviously yesterday's high is the first initial potential resistance point. So we've got a much tighter upside this morning than a downside. Possibility of a profit take move on this. I'm not quite sure how this yen movement is going to affect the stock indexes. I don't think it's really going to do an awful lot, but yeah, we'll see. So potential today, either direction. Doesn't look like it wants to go anywhere at the moment. But the gap fill is the obvious first port of call to the downside, which it's already gone to. I am short. Stops seem very tight. Right. Quarter for an ADR. 2. So I just want to do a calculation quickly. Yeah, that's right. Okay. Right, just thinking. Probably hear the cogs turning. So yeah, so obviously we're off to the downside to start off with at the moment, but not a lot of volatility this morning. Earnings wise today, there's a lot of earnings coming out on the US. Again, as usual, here we are bang in the middle of earnings fortnight. So last night we had Ford, Intel, Mondelez, and Roku. And this morning we are having Aon, Chevron, Exxon, and Procter and Gamble. So fairly big companies in there. I think, quite sure what indices we're in with these. NASDAQ and the Dow. NASDAQ, Dow. So it's very Dow heavy, this lot. So we probably get a lot more volatility in the Dow today than we will with the other indices. Dow's going long at the open, trying to. But yeah, we'll see what happens. One sec, I'm just trying to get my windows in the right order. So the Dow basically a little bit of a whipsaw at the open. So far, no direction though. Not a lot of volatility at all this morning. So, morning everybody else. I haven't said morning to. Thomas, Burke, Subiso, Ultro, Harry. What's happened with the Swiss? What's happened to the Swiss based on the yen news? Not a lot. Swissy doesn't seem to be doing anything. Euro odd 125 ADR. US dollars moved and the yen's moved. Swiss franc hasn't really done anything that I can see. Which website to use for checking the stock earnings? At Interactive Investor. There's a link. Morning, Baggy. Right. So that's the news covered for what we've got today. So looking at what happened yesterday. So Bank of Japan yesterday, 6 o'clock, announced that they are going to just discuss tweaking the yield control to allow rates over 0.5%, basically. So in a nutshell, what this means is they may look at going back into positive interest rate territory. May. Yeah. Not guaranteed. They would consider the timing of such moves carefully after gauging the outlook of long-term yields, blah, 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 which is what they always say. We are closely watching this. We're closely watching that. We might do this. We might do that. But when they do it, they really do it. So this basically, obviously, the market reacted massively to this yesterday. We had a huge rally on the yen. Everything came down, collapsed 150% plus against the yen. So all the yen pairs, massive, strong push to the downside. Then this morning, we had the news of their CPI. Intel's stocks are up. Ford is up. Dow potentially should go up today. Intel's up as well. Dow and NASDAQ probably slow grind rise today, possibly in the Globex session. So CPI basically up for the yen, which means it's not going the right direction. Inflation, you want to keep coming down at the moment until it gets down to about 2%. But they've never done anything with their interest rates. So this potentially could mean the interest rates going up. They are only going to do it in small increments. So, well, I say small increments, 0.25% to 0.5% is possible, but it's all talk at the moment. Australian retail came out overnight as a miss as well, so a little bit of a weakness on the Aussie. Their interest rate, they kept the same. Expectations for inflation have begun to show upward movements. Yeah, so they are basically starting now what we've been experiencing for the last 18 months. It's all a massive delayed reaction for Japan because they've had their interest rates low. They've got all sorts of other problems going on. They keep printing up money and all sorts of stuff. But basically, it looks like they might be coming back into line with everybody else and start to be affected by interest rates. So if that happens, we're going to see some strength coming. So we just need to keep an eye on it basically today. If a September rate hike comes, it will be the last. What? From the ECB? That's big news. So interest rates obviously went up to 4.25 in the euro because we got the rate increase yesterday. So what they're saying is 4.5 is going to be the terminal rate for the euro, even though they've got 5.5% inflation at the moment. Unemployment's really high. So yeah, I would question whether Lagarde agrees with that statement. That's pretty terminal. It will be the last. You can't say it will be the last because if inflation goes up, it won't be the last. But that seems pretty stern to me, doesn't it? That should be negative for the euro, really. Australian dollar's coming down. So euro's starting to drop against the CAD, starting to pull back against the Swiss. Yeah, see, look, he gapped the market up there, look, with that statement. Bit irresponsible, that. So we gapped up 7 pips on that news. Doesn't seem to be having too much impact on the euro. Some Bank of Japan news just fly past, as I saw there as well. Won't hesitate to add easing if needed, depending on market situation. Yields go beyond 0.5%, go beyond 1%. Right, okay. So basically, long and short of all of that lot, potentially bullish yen moving forward. Euro, I would have said, should be bullish movement after yesterday, but after what he's just said there, might put a spanner in the works. But so yeah, it's just be careful with the yens basically, because that is quite big news. And obviously, as you can see, the market reaction to it has been very, very strong. So this morning, we obviously had the interest rate news come out. We had a massive spike up. We've had a massive spike down. So it's done 200% of its average daily range in both directions. And then we're sitting back exactly where we started. So huge whipsaw. This is indicative of basically the market readjusting itself. So it's just basically getting its ducks in a row ready to move. So the next move on the yen, hopefully today, will give us an indication of which way they now want to go. So this is a directional shift. Probably everything XXX JPY to the downside with yen strength coming through. But how long that lasts will depend on what the Japanese say next. 125 ADR on the Aussie US. Aussie's not very happy this morning off the back of its retail figures. All coming down. These might be good mean reversions though. So but yeah, so anything you see yen getting extended, we've got some RSIs getting extended on Aussie yen. New Zealand yen was extended this morning, I saw, which has come out of extension now. Any of these that you see as opportunities for longs, just be very careful and make sure you don't overexpose yourself on the yen. Get your spacing nice and far apart, because if this does want to go on one of its rallies, probably have to go back a while to see one of its rallies, but they tend to be fast and hard and they go on for ages. Probably better to look on the 4-hour chart. Yeah, so you get these huge drops, which are really fast and really hard and give you very little opportunity to get out in the opposite direction. So, you know, ADR on this is currently 97. That move there was 8 ADR straight down. Yeah, it doesn't stop. So when they pile into the yen, they really do it fast and hard. So it's quite, this is why a lot of people don't trade the yen. A lot of people love it, but a lot of people just don't like trading the yen because it can be very volatile. And it's all usually down to the Japanese, which it's all to do with their intervention and everything. But imagine, you can see the size of that move there. I mean, that was an intervention move. But yeah, you could be down here, very possibly down here, at some point Tuesday, Wednesday next week. So just bear that in mind if you're scaling in. You don't want to be getting in like that. Yeah, you want to be getting in like that. Just in case. It will always pull back. You're always going to get a profit take move because the banks can't sustain buying because there's no one that will be left to sell. So they can't sustain it forever, but you just be aware that you might find it quite difficult to get out because you're going counter trend or counter fundamentals on these yens. So that's the yen news. ADRs today, we've got quite a few. Obviously, as you can see, lit up like a Christmas tree. Markets only just opened in London. We're already lit up like a Christmas tree. And we've got a few RSIs. So we'll go and have a look through those. But let's just have a quick look back at what's going on with the DAX. So stopped out on the DAX short. This is using the trailer at the moment. So not sure about trailers. I've set this up just to test the functionality of it. But that's why I don't like trailers, because if this thing now collapses, I'm stopped out for no reason whatsoever. Trailing when you get to target, fine. Trailing just because of trailing, not a good idea. Just watching what this Dow is doing as well. I get the feeling with the Dow, we might rally to the upside today. So far, though, it's very lackluster open across the board, all indices this morning. Really just not got any oomph at all. Let's go and look at the FX pairs. Much more fun. Harry, can we look at Euro US dollar? Yep. Oh, that one's not on the cards today by the looks of things. No, it is. It's a 4-hour RSI extension. So just about extended again. Got a nice push up there. So Euro US dollar got in short and out on the short, then flipped long, got out of the long, and then it obviously collapsed yesterday. So Euro and US dollar are a difficult one to call at the moment because in theory, the euro should be bullish based off of its interest rate rise and what Lagarde has said. Although this morning, the ECB seems to have a little bit of a conflict about whether or not it is going to be terminal or not. But US dollar, sorry, that's the wrong way around. US dollar temporarily bullish based on all the news that we've had. But the next news that we get is bearish on the US dollar, it will just collapse. So I fancy this long term fundamentally. The buyer scorecard says this is a sell at the moment. It's a -4 fundamentally. And at the moment, it's a -6 because retail are all longing Euro US dollar at the moment. Yeah. So it's one of those things, I think, with the buyer scorecard, sort of, you've got to take a little bit of a pinch of salt at the moment because we don't know. We're approaching terminal rates on all of these, so it will shift potentially either direction depending on who announces their terminal rate first. And the euro seemed to have, this comment this morning. If a September hike comes, it will be the last. It's not your place to say that. For a start, that needs to come out of Lagarde's mouth, not yours. The September meeting could bring a hike or a pause, right? So we're now having, look, this is conflicting information. So just kind of take a lot of this with a pinch of salt. I think the euro's got further to go. Its interest rates are still too high. The US, its interest rates have come down to a pretty good level. We've got forecasts for another year of deflation, if you like, on the inflation, which means that they should be able to pause their interest rates and they should be the first one to drop them. If that happens, US dollar is going to go negative. If US dollar is negative and euro is bullish, obviously this is going up. If the euro is neutral and US dollar is negative, we still should go up. Yeah. So there's much more upside on the euro US dollar still at the moment. But we'll have to wait and see. But at the moment, it's not doing anything. There's no reason to get into it at all. It's had this big, strong push down. It is just about extended, but not no real entries at the minute. So just wait for the usual, wait for RSI extensions, wait for a strong move in one direction, and then just get the mean reversion off of it. Wait for the reversal alerts. Euro Swiss. So Euro Swiss lied me. Yeah, we're off. Look at that gap. This is exactly why we look at the news. Yeah, everybody, you'll go, if you go into Telegram groups and Discord channels now, there'll be a load of people going, what the hell's going on with the Euro Swiss? It's like, it's very obvious what's going on with the Euro Swiss. One bloke's just made it massively bullish, and then the other bloke's bearish, and the other bloke's come out and said, no, that's not right. And it's gone back up again. Yeah. You need to understand what's going on when things do things like this and what the long-term implications are. This is a bullish currency at the moment. There's no reason you should be saying you're going to terminal rate when it's just rubbish. But anyway, so yeah, we are making the move. So this aggressive drawdown control position I got on. So I've had 2 attempts at aggressive drawdown control on this Euro Swiss over the last couple of days. Both failed, because we've just been stuck in this little grindy range after this drop. So TP on the aggressive position, which is there, you can't see it, it's that one there, is back up here under this low. So I'll be taking off the aggressive drawdown control position there if we get to 125 ADR. And then I'll be able to do a little bit of DD control with that money. But yeah, it certainly seems to be going where we want it to now. Expecting basically a pullback on this move. So this is my overall target up here in these propulsion gaps, which it should come up and retest. However, it may be that we just do a shallow pullback on this and it continues down. Don't forget, even if the euro is massively bullish, the Swiss franc gets massively bullish with it. And the Swiss franc always has the power to do more, because when the thing you've got to think about the euro and the Swiss relationship is they both move together in waves when the euro is moving up and down. When something goes wrong in the US, Japan, the UK, or anywhere else, they take money out of those and they pile them into the Swiss franc. Meaning if the euro is pushing and everything else is going wrong, the Swiss franc will push twice as hard, which is why you get these massive moves. This isn't caused by euro weakness. This is caused by Swiss franc strength as money flows into and out of the Swiss franc. So we'll get those pullbacks. But what we don't want is anything to go wrong anywhere else and people panic and put money back into the Swissy because it's a safe place to put your money, in which case this will come back down. So we just need a little temporary reprieve up to there. Get out of this one, but we'll see what happens. But yeah, all going in the right direction this morning, which is great. They are starting the pullback. But there's a lot of talk coming out of the ECB this morning after the rate hike. So hopefully they don't dump it. But we haven't got Lagarde scheduled to talk today, have we? No. The other thing we've got today, obviously, all day is the German CPI figures coming out. So once the final state from Germany is in, we'll get that final number tally come in. We'll get a rally or a dump on the euro then. So if we get higher than 0.3 on the German figures, we're going to get a pop on the euro as well today. So a lot of potential for positive movement, which is good. Excuse me. Morning, great. Right. Let's have a look at the RSIs and ADRs. The Dow's broken long. The DAX is just about to trigger me long as well. So if this does trigger, we haven't got the gap fill done, but we have got this done. I've said this before in here. You've heard me say this before. When you get a gap fill, I always like to look at the area before the gap fill as well. Because quite often this is kind of taken as an area of price and it doesn't always do the exact fill. Sometimes it sort of gets to just before where the market closed, which is what's in this case. So kind of class that as a potential fill done. But if we do break to the upside, obviously first resistance is up there, which is yesterday's high. So TP1 is 1.5R, just under yesterday's high. TP2 will be up around ADR, which is 3R. It's got a break yet. God, the Dow's coming down again. It's nasty open today. Right, ADRs. So there's a lot to look at on ADR. So from a news perspective today, we've had some negative retail figures on the Australian. That doesn't tend to do an awful lot most of the time, which is why it's not here. It's yellow news. And obviously, we've had all this Japan news coming in. We're coming off the back of the interest rates from the euro. We're coming off the back of the interest rates from the Fed. So there's an awful lot of volatility in the market across the board at the moment. There's a lot of repositioning going on, shifts in direction all over the place. So you're going to find you're going to get a lot of ADRs. Every ADR is a possible mean reversion opportunity, obviously. So as this is pushed all the way down there, if we get some weakness coming through on the US and the Canadian dollar this afternoon, this could well push back up. Don't forget, propulsion gaps get filled. Yeah, this is why we have the indicator to show us what happens in the past. Yeah, all these old propulsion gaps get filled. So we've got a load of propulsion gaps in there. Doesn't mean it's going to come straight back up and do that. It could take days, weeks to get back up there. But we've got lots of upside targets. You are 125 ADR. You're coming down to monthly support. So there's lots of confluence here. RSI is extended on the hourly. So Aussie CAD looks like a nice looking long opportunity. Fundamentally, at the moment, the US and the Canadian dollar should be a little bit stronger. But it's only going to take one negative news. And we've got 3 potential possibilities this afternoon with GDP, PCE, and University of Michigan for them to get those negatives. And if that happens, that Aussie CAD's going straight back up. So obviously, if it all comes out as positive, it's going further down. But yeah, so there's good opportunity there. Aussie dollar CAD, M5, wait for the reversal alert, obviously. Don't just jump in because it's extended. Wait till you got some strength in your direction. So look for that W pattern and then jump in. Look for somewhere around about half an ADR. Same with all of these. Aussie dollar Swiss hit. We just had the reversal alert on that one. Just triggered. You've already had one on this here. So the initial trigger was there. And they just pulled back down, took that liquidity basically, and just are putting in another leg now. So that's your potential reversal. Aussie dollar yen. So I'll quickly whiz through all the yens at the same time. Every single one of these yens is not an ADR today. It's a whipsaw on the news. Yeah. So just forget the yen at the moment. Move on to something else, because the yens, if I was going to do anything with it at the moment, I would look to sell everything against the yen, i.e. yen strength. But I would give it a couple of days for the market to figure out what the hell it wants to do with the yen. So Aussie yen, CAD yen, they're all hits, but they're all hits because of whipsaws. Yeah, just a big mess. So yeah, there's no point going through them all because they're all the same. It's just a massive whipsaw. So you can't really trade any of those today. Aussie dollar, US dollar. Again, that's the same as the Canadian dollar. Thanks for the follow, Monty. Welcome aboard. So yeah, this is basically Aussie dollar CAD and Aussie dollar US dollar, virtually the same thing. If you take both of these mean reversions, obviously you're pretty much getting into the same thing. Yeah, US dollar moves with the Canadian dollar. Aussie dollar obviously moves on its own. So if you're trading both of these mean reversions, you're kind of doubling your exposure. So I'd take one or the other. It's worth one of those things where it's worth just monitoring both, seeing which one gives you the first reversal alert, or jump out onto higher time frames and look for which one's coming to the best levels. So Aussie dollar, US dollar, we've got a lovely weekly and 2 week ago low coming up at a propulsion gap at 175 ADR. So that looks like a pretty good support. Aussie dollar CAD, as we just looked at, we're coming down to a monthly level in a propulsion gap, roughly the same distance. So again, these are both really easy mean reversion opportunities. That is that. Yeah. That's what we're looking for. So same thing, Aussie CAD, Aussie US, take one or the other. If you want to take both, but obviously bear in mind we've got Canadian dollar and US dollar news this afternoon. If they both come out as positives or negatives, you're going to get the same result on both pairs. So you're trading the same thing. Euro odd, that's extended as well. So I'm just keeping an eye on the futures market. Long on the DAX. Struggling, really struggling today. I'm surprised there's not more liquidity in the market. We've just had stock earnings from Ford and loads of others, and we're not really getting a massive drive today. Maybe Sting's been taken out of the moves today with the yen announcement. So Euro odd, big push up there. This is the biggest range bound monster in the world at the minute. So we've been in a range on this since end of June, entire month basically, pretty much. We are just range bound, coming back up to range highs. Want to be selling it. We've also got we got that weekly resistance at 175, at 225. We've got that monthly level just beyond, somewhere around 300 ADR. We've got that high there. So this is a good looking short opportunity. We're just getting extended on the hourly. Obviously we've hit at 125 ADR today, so you can drop down, take a short on this. This is counter trend though. Euro, we should expect it to have more strength. We've been waiting for strength on the euro for a while, so now it's actually coming. You are obviously mean reverting against potentially a longer move, but you know, to go up, things have to push and they have to pull. Then they push again, then they pull, then they push. That's what market structure is. Yeah, the profit take moves on the rallies. Yeah. So even though this is rallying, if it rallies up to 175 today, you're getting out on it at some point. So so potential opportunity for a short on that one. Euro yen, we've got pound odd. Again, pound odd, euro odd, very, very similar. The pound and the euro tend to move in tandem a lot of the time as well. This is nicely extended. Again, the pound is along at the moment, bullish. We should be looking for buys on all pound pairs. There's no reason why we shouldn't be rallying the pound. Australian dollar's obviously having this overreaction to its retail figures. It's not that bad, guys. But yeah, so obviously this is rallying at the moment. Pullback, push. We've got a nice resistance coming up. This isn't that extended at the moment on the RSI. It's getting there. It's above the 70. If it gets above the 75, I'll be getting in short on this one. Got nice resistance coming up at 200 ADR. We're at that weekly level. So there is potential for just a pullback into here, into that propulsion, maybe even into there before next leg up. Yeah, same thing as that. Same thing as that. Same thing as that. Yeah, normal market structure. Pound New Zealand. Again, that's just hit ADR. New Zealand dollar weakens along with the Australian dollar. Those two are in bed together. So the Euro Swiss, Aussie New Zealand, Euro Pound all do the same thing. US dollar CAD does the same thing. So this is obviously pushing the same as the Australian dollar. So potential short on this one. This is a really nice high reaction as well. So we're just tapping into yesterday's high, which is also the previous day's level as well. So there's double bubble resistance here. Basically, it's just this whole area basically as resistance. Yeah, we've just broken above that. So all the liquidity and everybody that shorted the markets here is gone. So there's no more sellers at this level. Yeah. So we'll have to come down before we can put another leg up, potentially. We've got three really nice levels coming up on this as well. This whole area here. If we're going to remain range bound, good selling point. But look at what the market's done recently here. So we've got these lows. Look at these lows. Yeah. So we haven't managed to get back down and retest this area. So it shows you there's more buyers in the market than there is sellers at the moment, because we haven't come back down to these levels. So the buyers are holding price at a higher level than the previous attempts to go short, which means there's way more buyers in the market. So the chances are this will get a breakout this time. How far it will get obviously will depend on how many buyers there are there, but it does look like it wants to drive up at the moment. So we're forming basically an ascending wedge, which will tend to break to the upside. So it's whether or not they need to pull back again before they rally. But if they do rally, that would be a much better place to take it. If you can get an entry at 125, 150 ADR today, that'd be much nicer entry. Dow's broken out the high of the day. Just quickly looking at the Dow. I know I'm looking at, should be trading the DAX, but I'm finding the Dow and the DAX pretty much doing the same thing at the minute. So off to this high. If you look at the Dow, we've got nothing but clear air on the Dow until we get here. So pretty much the same as the DAX. So the DAX, we're looking for a rally up into that high, that sort of move. Pretty much the same distance on the Dow is available to the upside today before we're going to hit some resistance as well. So both of these nice looking long opportunities up into there. So you got roughly 60 points to the upside and about 50 odd on the DAX this morning. Pan New Zealand, so New Zealand yen and US dollar yen. So there's all your ADRs covered. So lots of opportunities there. None of them are amazing, but they're all okay. So lots to look at there. Potentially for intraday scalps. Oil, we'll have a look at oil in a sec. We'll look at that in a sec, actually, yeah. What do you think about create trailer by new propulsion gap created? What do you think about create trailer by new propulsion gap created? Don't understand, Peter. I'm only watching it, but it seems it works once you're in a trade. No, sorry, don't get it. Don't understand it. I've tried, my brain can't comprehend. You're going to have to put that one through the translator again, Peter. So oil was stuck. Trail stop by new gap. You could do, yeah. I mean, if you want to. I don't like trailing stops, full stop. Trailing stops will get taken out, right? So if you use a trailing stop, you will get hit. The only time I use a trailing stop is if I'm happy to get out of my trade. Yeah. So when you see me posting in Telegram or in here, I say I'm putting a trailing stop on this, it's because I'm happy to get out of the trade. I'm just not going to get out right now by pressing the button. If the market was for any reason to just go bop, 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 and then that, I'll take a little bit extra. But if right now it goes down, I'm happy. I want out, right? Because market structure means that you will always be taken out by a trailing stop. The market pushes and pulls and pushes and pulls and pushes and pulls, right? Every time it pushes up, if you put a trailer on it, you will get taken out. As it pushes up, you put a trailer on it, you will get taken out. A trailing stop stops you profiting. So if you use one, you will lose all of the upside profit potential available to you. But if you're happy with the profit that you have, that's what trailing stops are for. There is absolutely no way of calculating the best trailing stop. You can use the parabolic SAR, you can use propulsion gaps, you can use the last low, you can use the low before the last low. Whatever you use, at some point, that will get taken out and you will be stopped out of that trade. So I don't use them. I don't advocate them. I never talk about them apart from in a negative perspective. Reason being, I've spent 15 years of my life backtesting strategies and building automated strategies. Every single one of them, I put a trailing stop in. Every single one of them, I never use it because none of them work. They do not work. They reduce drawdown. So they will stop your drawdown, but they will limit your upside potential by 10 times what your limited drawdown will be, right? So because you're I said in here before, I've called them a stop profit, yeah? Because that's what they are. A trailing stop stops you making profit, right? If you got in here, for example, let's say you got in there somewhere, right? And you were going long up to here and it broke up to there. If you put a break-even stop on your trade, you get stopped out at break-even. Of course you do, because you put a stop in an order in the market to tell you to get out with no money. You're going to get out with no money because that's what you've told the market to do. If you put a trading stop on it, you'll get out with a little bit of profit, but you'll miss everything that's going to the upside. Yeah. The market goes like that. Every single one of those is going to stop your trade. So if you're happy to stop. But if you use a trading stop, you will just get stopped out of the market. Yeah, this is why I said, this morning, this DAX one, I've got a trading stop on, I'm testing. And today, instead of taking that much loss, I took that much loss. So it's limited my downside. If this had done that, I've lost $3.5 grand for the sake of saving myself a couple of $100. Yeah. What it does is it stops you losing a little bit less. It stops you losing a little bit more money, basically, but it misses all of the profit if your trade works. 50% of the time your trades work. If 50% of your trades stop out with a little bit less profit, but they miss all those big runs, never, ever going to be profitable. Trading stops are just useless. Apart from the fact that they reduce your drawdown. So if you want something to reduce your drawdown, that's fine, but just accept the fact that you will make way less money. Again, I've proved myself right 1,000 times with this. I've built millions of EAs. That's an exaggeration. I haven't built millions, but I've built thousands of EAs, and I've tested trailing stops of all shapes, sizes, parabolic, under candle, ADR based, everything, daily low base. I've tested everything, right? There isn't one stop loss that works, that trails. Yeah. It's just one of those things. People use them because they're scared of losing money, which is fine. If you're scared of losing money, what have you got too much of? Risk. If you put a trade into the market that immediately you have to go, oh, I've got to put a stop on it, you're over leveraged. You shouldn't have that panic that you need to put an order in to lose you money. Because if you are, you've got way too much size up, way too much size. And, it's like today, it's like, well, yeah, it saved me, like literally, it saved me that. I've lost 664 instead of 1,000. So $350 that saved me. If this had jumped down to here and hit TP, yeah, that's worth $3 grand, that level. So for the sake of saving myself $300, I've taken away the potential of earning 3,000. That's 10 times more than the trailer saved me. If you're going to stop out, if your trade's wrong, like it is here, stop out. Don't stop out with a little bit less to save yourself a little bit, because the market is going to go like this. It doesn't just go like that to where we want it to. It goes like that, and then it goes like that, and then it comes down to here, and then it goes like that, and then it actually gets to your level. But on its way, it's going to go all over the gap. And if you've got an order in the market that says, if you go all over the gap, get me out, you're going to get out. It doesn't work. Unless you're a trend trader, and in which case you can identify swing levels, but they're still really risky. Because if you think about a swing, how we measure swings, most people, me included, if I'm looking for a pullback level, I use a fib. Which one's it going to be? I don't know. It's going to be one of those 5, isn't it? Somewhere around one of those 5. If we're going to get a pullback on oil and it pushes, it's going to be somewhere around one of those 5. So where do you put your trailer? Down here? Well, what's that going to save you? You only got in here. It's a break even. Yeah, all right, that's a safe break even. But you're 5 days into the trade. Pretty safe to put it there now. But don't put it there under that swing low, or that swing low, because if it does a normal 38 retracement, you're out before it rallies up to $83.50 a barrel, which is what we're expecting. You know what I mean? It's just that, trailing behind propulsion gaps. Good theory, But it's the same thing. Trailer behind that. Which one of them do you use? Which do you trail behind? You know, it's this. Just don't use them. Just don't use stocks in general, as you know. I don't. That's why I make money. I don't use them. Dow's broken to the upside. We're off and running. DAX is off and running. Just made a new high. I say running. We're off. I wouldn't exactly call it a run. It's more of a gentle stroll, but we're off. Oil. Sorry. Okay, so I have to learn position trading and English. Yes, I'm afraid you do, Peter. Sorry about that. I have done all my videos, on the website. If you go onto the website, all of my videos now have text versions. Where are they? So all the videos I've got, basically, I have now had them transcribed. Yep, so they're here. Look, the actual what I'm saying is now transcribed into text on the page. So the idea of this being that anybody that speaks a different language can now go and translate this, so they can read what I'm saying in the video in their own language. So that's why I've done this, to basically make it easier for people that don't speak English. Just so you know. So all these videos, even the bootcamp, look. Yeah, each bootcamp video now is transcribed. Obviously, they're long. So, and obviously, whatever translator you use, it's up to you. I don't use any translators because I just don't literally need any other languages. But anyway, what's the difference between 1 hour and 5 minutes? Don't know. 55 minutes? How do you backtest the ORBEA without a trailing stop set? How do you backtest the ORBEA without a trailing stop set? Don't use a trailing stop. I don't understand the question. Is it silly question day? Sorry. If you want to backtest the ORB EA without a stop, just don't use a stop. So your stop loss setting is there. Look, trailing stops, risks and targets. Trailing stops. Sorry, it's down here. Look. Yeah, trailing stops. Use trailing stop loss. True. Set that to false. That's it. It doesn't use one. Just get rid of it. But test it, right? So run a set file, test it. Then run a set file with a trailing stop and see what happens. You will take less drawdown, but you will also not make as much profit. I'm interested in profit. When the opening range breakouts go, they go. We make a load of money. When they don't go, you can reduce the amount you lose. But you can't tell when they will or won't go. So do the test and you will see the result. The result is always the same with a trailing stop. It always just minimizes the amount of money you can make. Oil we're looking at. So yeah, we haven't gone anywhere for 5 days now. So we broke the highs. We were like, yeah, hey, we're off. And we've literally done that. So we're not going anywhere at all at the moment. My concern with oil, target is still the same. It's 83.5. My concern with oil is, are we needing a pullback before we do a new leg? Which is very, very difficult to tell. The oil inventories this week didn't really do anything on Wednesday. So that was what we got on Wednesday was nothing. We didn't even manage to break a new high on the inventories. So we had basically an inside bar. Then we had an inside bar breakout to the upside yesterday. So it is all still bullish. So it's just a case of trying to find a way to get in. Like I said yesterday, you could literally just drop down M5, take the next reversal alert that you see and get in on that. And you've got as much chance of it rallying as you have of anything else. So, but it's difficult to get into at the moment. There's no RSI extensions to use. We had one back here on that hourly extension, hourly reversal alert. So that was your last long trigger. Didn't really get extended. And this was less than a 38 retracement. So this is basically just a flag, but it didn't even flag it. It's just kind of, it's just not doing anything that's making it easy to trade at the moment. There's no nice, easy pullbacks to get into. There's no accumulation breaks that seem to be working particularly easily. It's just awkward. But it is going up, which is bullish Canadian dollar and bullish US. So if this continues to go, it just fuels fire for the Canadian and the US rally. Oh, for crying out loud, Dow. Hopefully this is just a pullback. And DAX. Right, let's look at the RSIs. Just have to think, stop loss is a vulgar word. Exactly, Peter. Morning, Agosa. Morning, DAX is rejected yet. Well, it hasn't rejected. There's nothing to reject. Well, there is, I suppose. The pre-market open we're at. Basically, I think what this is more of a start of a pullback leg. We're probably just pulling back on this move, yeah? So when you get a big candle like this, it's worrying because it looks like a potential rejection. And this is probably what people are selling. But momentum is certainly to the upside at the moment. So likelihood is the sellers will take control back somewhere in here. We've got no propulsion moves to look at the moment today. So hopefully they'll just step in and buy it up. But not looking great. Let's see. Thought feeder. I mean, how does the EA know when to get out in testing? When this is normally manually done in real time. The EA gets out when you tell it to get out in the tester. I'm not getting your questions. These settings in the EA make it trade, right? They do what it says. So these TP settings that you use will put TPs in. It gets out when it hits target. It gets out when it hits a stop. It's the same as anything. It gets out when it hits a target or it gets out when it hits a stop. In the strategy tester, you test strategies. It's for strategy automation. You can't manually trade in the tester. That's unless I'm misunderstanding the question. It just seems completely obvious to me. But thoughts on gold? Somebody said it. Sarah. God damn it. Maximum loss on Dow today. I'm out for the day on the futures market. Right, gold. I completely over leveraged on that this morning. I'm $2,000 away from passing an evaluation, so I thought, screw it, I'll go for it this morning. 2K loss today. Back at it on Monday. Gold. Haven't got there yet though. I'm on 1600 drawdown. Difference between two candles in futures, $2,000. Gold obviously is a sell at the moment because of the US dollar strength. So this afternoon, basically, you will find out whether or not that's going to be a continuation move or we are going to pull back on it. So if the PCE comes out as positive, gold down. If it comes out as negative, gold up. So we'll have to wait and see. Never mind. Shouldn't have done that. So yeah, at the moment we're stuck in this range, monthly range. It seems we're stuck in this monthly range, but we're bang in the middle of it. So again, this is all driven by the news, and it's a US dollar cross, so you treat it like any other US dollar cross with a little bit of an angry child element to it. So pullback short, but it's all going to depend on what happens with the news. But I don't trade it, so. But it's just a US dollar cross. The US dollar at the moment is fairly bullish, so you would have to say you'd be looking more for shorts on it than longs. What sector is the US 30? What do you mean sector? It's the Dow. It's not a sector, it's a stock index. How to articulate. Never mind. Yeah, I think there's a language barrier, thought feeder. Basically, in the strategy tester, you test strategies. You set the EA to do what you want the EA to do. You press the button, it gives you the result. It's basically a strategy tester. That's why it's called the strategy tester. But I don't quite know what your question is. Made of what? The Dow. So the Dow stocks are this lot. That's them. That's the Dow. There's multiple sectors in there. You've got entertainment, you've got health, you've got finance, you've got retail, you've got tech, food, banking, healthcare, all sorts of stuff. Bit of motor. It's not a sector. The idea behind the Dow is to give you an overview of stocks. So they've all got slightly different weightings for things, but the Dow is kind of your overall snapshot of multiple sectors and the biggest players in those sectors. So it's kind of like the big boy stock market. So if the Dow's going up, it means business is doing well. NASDAQ is obviously tech. So it's the top 100 tech companies. So how is the IT industry doing? S&P is a very broad index, and it's the Standard & Poor's. So it's basically the top. It's kind of like the top, not so much earnings, but the top employers, if you like. So that index is a broad market view. Yeah. So they've all got a different way. They're different ways of looking at how economy is going, how business is performing. And then you've obviously got the sector indexes as well. So you can just trade the motor sector, you can trade the pharma sector. So there's indexes for those as well. And obviously the NASDAQ is one of those. The NASDAQ is the tech one, but the NASDAQ is the popular one because tech is the biggest, fastest, most money-making sector, which is why everybody trades NASDAQ rather than trading the pharma index. So they're all different. But, they'll move pretty much the same. Morning champagne, Euro US dollar, already done that. Go to watch the beginning. Sorry, the Dow is traded as the US 30. Didn't trading. Yeah, so the Dow is the US 30. That is the Dow Jones. So the DAX is the DAX is the DE40, or the Germany used to be called the Germany 30. Now it's called the Germany 40, also known as the DAX. NQs, NASDAQ, QQQs is all the same thing. It's the tech sector. It's very confusing. I don't know why they have so many names for everything, but they do. Just to confuse the hell out of poor retail traders so they can steal all their money. Stop loss is going to trigger on this. Let's see. Trailing stop. Don't want it. Don't want to trail. I need to take that off on all of these. Yeah, it's very confusing. I used to trade in a group with a load of stock traders. And for, I don't know, probably the first 2 or 3 months I was in this thing, I was too scared to ask questions. And basically, these guys were saying, how many got on the queues? Or like, the queues have just had a rally. And he'd go like, yeah, wow, how many contracts do you have? 6. Oh, awesome, mate. And I was sitting there going, what's the queues? And then saying, I'm going to go and buy the QQQ. And then he'd go over to the NASDAQ and buy the NASDAQ. And I'd be like, you said you were going to buy the QQQ. Confused the hell out of me for ages. And you realize it's all called the same thing. They just have lots of different names for stuff. I'm going to go and buy the NQ. It's the same as the QQQ. It's just a different version of the index, weighted differently. It's all the same stuff. So when you go into the futures market, you literally just trade the NASDAQ, the Dow, and the S&P. Forget everything else. It's just too complicated. Those are the three indexes you want to follow. And with CFDs, your brokers, your general Forex brokers, they will all trade the NASDAQ, the DAX, the Dow, and the S&P. They will call them different things, but it's the same thing. It's the cash equivalent of the futures market. You'll get different prices on them as well. So the candles will move the same, but the price will be totally different. And again, that confuses the hell out of people. Forget about everything. All you need to do is, when you buy this thing, if it goes up, you sell it. Forget what price it is. Forget what it's called. Everything goes up and down. You just need to concentrate on how it moves, and then you can understand how to get money out of it. There's too many things to trade. You know, this is why people say to me, what about the exotics? Have you not got enough to trade? There's 28 Forex pairs. You've got metals, you've got indices, you've got individual stocks. Why trade exotic pairs that are hideously complex in their movement, cost twice as much to trade, are volatile as hell, and haven't got any liquidity? You know, there's lots of things. You just focus on what everybody else is doing and trading, and that's where the best place to make money is. You end up going around in circles and think, all right, I'm not making money because I'm no good at gold. No, it's not that. It's just something else. Yeah, it's not the instrument's fault if you don't make money. The instrument's just moving up and down. It's a chart. It's a load of candlesticks on a white background. Martin B, the champagne pappy. I'm sure EU. Right, okay. Virginia, Dow Jones Industrial Average. There you go. That's Dow Jones Industrial Average, one of the most closely watched US benchmarks, a price-weighted index that tracks the performance of the 30 large US companies listed in the New York Stock Exchange. There you go. Basically what I just said, but much more eloquently put, Virginia. Why didn't I just Google it? Franco, in the US, can't trade index. Now in prop, I have access, or at least follow along with me. You can't trade indexes in the US. Of course you can. That's all the US trades, virtually, indexes. Should be able to anyway. Which is the most liquid sector? Tech, NASDAQ. That's why everyone trades NASDAQ. Look at the Euro New Zealand. It's just hit ADR. So Euro's pumping, apart from Euro Swiss. So if you look at there you go. So that's what I was talking about with the QQQs. The QQQs are the inverse of the NASDAQ, right? And that was the thing that really was threw me. It's like, you can buy the NASDAQ, right? So if the NASDAQ's going up, the QQQs will go down. Fried my brain. Why not just buy the NASDAQ? Oh, I'm selling the QQQs, but why not buy the NASDAQ? If that does the opposite to that, what's the point in trading that? What's the point in that? If it's just a mirror image of the other thing, just trade that. Anyway, there's your QQQs. So, okay. So this is the most liquid sector, just purely because it's got the largest businesses in tech, and tech is the biggest market we have. Everybody has tech. Yeah. So you got like the Adobe's, AMD, Amazon, Apple, Facebook, Google. It's just huge corporations. eBay, Electronic Arts, just goes on and on and on. So that's why it is the most liquid, because more people want to invest in tech because they are boom sectors. And when tech companies take off, they really take off. So you tend to get more investment in them, therefore more stock purchases in them, therefore more liquidity in them, therefore they move faster. The NASDAQ is the fastest moving index out there. When you trade the NASDAQ, when you watch the NASDAQ and the Dow at the open, the Dow's going like that, the NASDAQ's going like that, because there's billions and billions going into the NASDAQ where there's way less going into the Dow. The Dow's only got 30 stocks in it. The NASDAQ's got 100 for a start. So you've got 100 companies which are bigger and more liquid in an index. That thing's going to be more volatile. With more volatility comes the more profitability. Yeah. If you go long in the NASDAQ with one contract, you can be out in 10 minutes with 2.5 grand. You do that in the Dow, it's going to take you 15, 20 minutes to make the same amount of money, which is why everybody gets attracted to the NASDAQ. Obviously, with that volatility comes the ability to lose money as fast. So not for beginners. It's a horrible thing to trade. I personally don't like it. I much prefer the Dow. New Zealand, US. So New Zealand dollar's moving quite a lot with the Australian today. Big drops on the New Zealand and the Aussie pairs. Good end to the week. Yen and Swiss trades all unwound. Good job, Peter. I'm not out the Swissy yet. Getting there. Nearly there. I might be flat for the weekend. That'd be nice, wouldn't it? Very unusual. What's the date? 28th, 29th, 30. 30 days have September, April, June, and November. 31 days. So Monday. So Monday's the last trading day of the month. Be nice to be flat by the end of the month, wouldn't it? Right. RSIs. I've been trying to get onto RSIs for the last 20 minutes. Keep talking. Aussie dollar CAD. RSI extension on the hourly. So I will be getting long Aussie CAD today. And that's coming down into a lovely support. Beautiful sell-off on this. Australian dollar, bad news this morning. Canadian dollar, good news yesterday. And this week in general with the US strength. So big, strong drop. When we get to the end of that big rally, we will get a profit take at some point. So I'll be looking to get in long on that today. Next reversal, New Zealand dollar CAD, ADR. So drop down M5. Reversal is going to trigger in a minute. So this is H4 RSI extension, H1 RSI extension, ADR, monthly support. How much more confluence do you need to get along? So I'll be getting in that in a minute. As soon as we get a reversal alert, which we're not at the moment because it's still coming down like a steam train. Aussie dollar yen, extended hourly. So again, be careful longs on these. I shall be watching my P&L today because obviously the EA is running automatically. It will automatically get me in on any H1 M5 mean reversion. So I will be getting in on any Aussie dollar, any yen pairs rather, that are RSI extended like the Aussie yen at the moment. So that's actually not extended on the hourly though. So it's come out of extension, didn't get a trigger on it. So if I do get into any any yens long, i.e. long against the yen, I will watch them today. I may take a decision to get out with a small loss on them, depending on what they do. There is a very good chance we might get a pullback on this. But when you see propulsion gaps of that size, they either get A-shaped recovered or V-shaped recovered in this case, or they just don't get tested again. You get the continuation. And then we come back and test them a couple of weeks later. So it's quite normal for that to happen. We still don't know. We've had no confirmation. We've had a lot of rumors out of Japan at the moment. So we've had no real massive confirmation from Japan. So I still think they will strengthen this up though. I think they'll start looking to buy the yen now. So I'd be wary about taking any of these extensions. So we've got Aussie dollar yen extended. We've got the pound yen, the euro yen on the 4 hour and the New Zealand yen. So I'm going to skip over those. They're all extended 4 hourly. Yeah. Potentially good opportunities. There's a nice 72 bounce on the euro yen there, and the pound yen as well. But be careful getting into these. If you're going to take them as mean reversions, you could be stuck in them if it is going to go parabolic for a couple of weeks, which it could do, but we'll see. So yeah, those are your yens. Aussie dollar, US dollar extended on the hourly. So we'll be looking to get in long on that one as well. So next reversal on that one, I shall be long, which will be there. So we'll take one on that today and start a position long. Euro odd, we'll be getting into that as well. No, I won't, because it's not extended enough. Not extended above the 75. That's where I need it. Big strong push. We have 125 ADR with 2 resistances coming up. So we've had a profit take on that move. This move we haven't yet. So looking for pullback down into that level or potentially back into propulsion before they come up and retest. They may well just come straight up and hit that and drop from that. They may well push further and get up to 200 ADR, 175 ADR and drop from there. But either way, that's really extended and stretched, isn't it? So if it gets up to there, be a nice looking short. It has already given you a reverse. Oh no, it hasn't quite. Not quite got a reverse alert yet on it. Looked like it should have done, but it hasn't because that little gap up. So that'll be your reverse alert short. Play it back down into propulsion, basically. It's euro odd. Pound odd is also extended on the hourly. Same trade, short. Again, you're going counter trend with these. The pound is strong. But, you know, even stuff that we're expecting to go up has to come down before it goes back up again. So that's extended. Nice looking opportunity there on the hourly. Not quite above the 75 level yet, but if you're taking the 70s, you could get into that now. Nice resistance. So, and obviously it's 125 ADR today, so it's exhausted, ready for a little profit take move. Euro US dollar and Euro Swiss are both extended on the 4 hour. Euro Swiss obviously is just coming out, so we know that one's already moving. And the Euro US dollar. So Euro US dollar is still getting hit down. This US dollar is still strong. Nice divergence on this one. So I think I'm going to sneeze. No. So we got bullish divergence at the 72 moving average, which is also a potential area of previous resistance, which will turn into potential support. Not quite extended on the hourly, so I won't be getting into that one myself. That's come beautifully off of that weekly level. But see the size of these propulsion gaps. That one should be tested, definitely, out of this level. So there's a nice little short there, long there, but it's not a lot. Next week, we're going to need to wait and see what happens with this euro. Want to see this euro rally, really, and get the market behind it a little bit. It should be, but we've got a really strong US dollar. So this afternoon, if we get decent PCE figures for the US, that's going to come down further. If the GDP for the Canadian dollar increases, that's going to come down further. So there is potential upside, more downside for the euro US dollar today. And if that is the case, we'll probably look at coming down to test this support at some point. We've got that high there as well, which potentially could act as a resistance support today, which is 125 ADR. So it is extended on the 4 hour. It's not massively extended, and it's not extended on the hourly. So it's not quite ripe, I don't think, yet. Needs a little bit more of a downside movement. But on the news, it could just fly. So wait and see. If we get negative CAD news and negative US news, euro US dollar is going to fly this afternoon. Pound order I've already covered. Pound yen, we've covered the yens. So we've got New Zealand dollar CAD and New Zealand US, both the same trade. Yeah, so both extended on the hourly time frame. Yeah, so take one or the other, probably not both. It's the same pair, same instrument, same movement. So ADR there, New Zealand dollar CAD, ADR. Just scaled out of drawdown control on my long. We'll be getting into a second position on this if we get a reversal alert. This thing's just not stopping today, is it? So waiting for a reversal alert. So there it is there. You can't even see it. It's that small. Look. Massive move, this, look. We've had 1, 2, 3, 4, 5 bull candles in London, pretty much, haven't we? Look. So I will be getting in on the next sign of strength. Just had some news coming from the ECB. In what the market's reacting to it. So ECB just said we are close to a peak or at the peak, which is not the impression I got from Lagarde yesterday at all. And this is all coming from other ECB members. Eurozone core inflation seen at 3.1% in 2024 versus 2.8%. So inflation not getting as close to target as expected, higher interest rates. Yeah. These guys are all saying we think we might be at the peak interest rate. All the figures are pointing to the fact that you are not, and you need to do more, which is what Lagarde said yesterday. So there seems to be some infighting in the ECB at the moment. From virtually every ECB member. So there's 3 of them now that have come out this morning and said, looks like we're getting to the peak, right? But the figures have just come out and are forecasting inflation not to be dropping as fast as they expect it to be, which is not where you want to be stopping your interest rates. Unless they're going to use some kind of other stimulus to do it, not interest rates. You might see the situation of September pause and an October hike. Right, so that contradicts what you just said, mate. Make your mind up. Talking in riddles, this lot. Ignore them all today. And it seems to be that the market is doing exactly that. Talking heads. So yeah, all these New Zealand dollars that are dropping at the moment, I will be getting in long on as and when. So H1 RSI extension is there on the New Zealand dollar CAD. I'm already long on that one anyway, so this will be a second entry. And New Zealand dollar US first entry potentially coming. If this continues to drop, I should be getting long on that one as well. And get a profit take move off of that. Push down. So there's all your RSIs done. So one sec. Right, let me catch up on the chat. Interesting, when there is a retrace, it retraces 50% of the run. Is there a reason for this? So basically, when the banks move the market, what you've got, when there's a move in an instrument, just trying to find a, doesn't really matter which example you use, but so let's take this move here, for example. So in this move, you've got multiple participants. You've got the within the institutions, banks, whatever it is, you've got commercial trades, hedge trades, and speculative trades. Those are the 3 main types of desks in the banks that move money in and out of the instruments. So the commercial desk's job is to just execute orders on behalf of the corporates. So usually they're done for transactional purposes. So those are one-time transactions, which will be converting the pound into the euro in this case. Yeah. So once that company has converted the pound into the euro, they are holding the euro. So that move that made that much movement, that's it. That won't get undone for any period of time until that company says, I want to convert my euros now back into pounds, please. And then an equal move will happen in the opposite direction. When that will happen, no idea. Could be the company's buying a load of euros because they're setting up a new headquarters in Europe, and that money will never come back out again. You just don't know. So those are the corporate orders. You've got the speculative orders, which are the ones which are basically making money out of the market. So as the market is rallying in one direction, they buy it. And then when it gets to a certain level, they expect the market to drop because there's commercial orders coming in, they sell it. So what you do is you get all of those orders typically undone 100%. So if I buy 100 million, I will sell 100 million. On my desk, I have a 100 million portfolio, and I need to come back to the bank and return more than that. Yeah. So my money, my initial pot is always going to be kept the same, which is why we see what we call, it's the thing they call it the efficiency of the market, balance in the market. Unfinished business is a term I use quite often. You'll hear me say that is basically where somebody's got lots of shorts on and they are now unbalanced in their books. So they need to come back to balance their books, get themselves back to there. So they put an equal amount of money in and out of the market. So this desk is putting money into the market and never pulling it out. This desk is putting all their money into the market and pulling all their money out. And this desk, the hedging desk, is putting all of their money into the market and holding it for a period of 1 to 3 months, typically as a hedge against a transaction that a corporate is doing. They will then pull all of that money out of the market. So they put 100 million in, they'll pull out 100 million. So between those 3 desks, what you have is all of them buying, for example, at the same time, but only one of them, the speculative desk, will want to take all of their money out quickly. So you get all of it push, half of it pulled out, loads more of it pushed in. Then the hedging desk and the corporate desk all take their money out at the same time and bring it all the way back to half. So you've still got some of them left in there. So that's why you get the waves moving at different levels. So when you get a rally, whether it's an A-shaped recovery or not, depends on whether all the money they put in is drawn out. Yeah, this is one bank I'm talking about. If they only take half the money out because the speculative take it out and the hedging take it out, but the corporates don't, you'll only get a pullback half of it, right? Then you may get a 38 retracement or a 50 retracement. And this is why fib is useless. It gives you an idea what the norms are. This is what typically happens, one of these, but you never got any clue of knowing which it's going to be. Somewhere in here, you're going to get a pullback. If it continues to the upside, it's somewhere in here, typically, you will find it will pull back too. So that's basically what happens. That's one bank. Don't forget, you've got 10 major banks controlling this thing, right? So if all of them, all of the desks in all of the banks decide to do the same thing at the same time, you get a squeeze because they're all doing the same thing. Because they're all doing the same thing, all these banks are buying and selling from each other. If they're all trying to buy at the same time, there's nobody to sell. So what do they have to do? Go further to find a seller because there's nobody looking to sell with enough liquidity at that level. So they have to go further and further and further. And this is where the sort of theory of eating the retail stops come from. Retail stops don't make up enough money for the banks to even execute their orders, let alone hunt them. But so that's basically how it works. So the movement is based on what is being executed at what time by what quantity of banks, which is an unknown, which is what I keep saying. You can't predict the future because these banks don't even know what they've got to do. If Barclays suddenly get a phone call from Amazon saying we need 100 million US, please, from our pound pot, they've got to do 100 million US pound transactions. They didn't know about that yesterday. How on earth are they going to plan for it? They can't. They just need to execute those orders, and they'll execute them for Amazon at whatever level they can get. If HSBC and Citibank are selling at that level and Barclays are here needing to execute these orders, they'll move the price up to there to go and get those orders completed. And then once it's done, they will then look at their books and go, right, if we put it back down to here, we will make X million today. That's where the speculative desk comes in. But if it only needs to put it to there, that's what it will do. So that's why you never get in a trend or in market structure, it doesn't do that all the time. We don't stay in a range all the time because there is imbalance in the market. because you've got 10 banks all doing different things with different desks at different times. Therefore, the market just goes up and down. But you've got a portion of the money which always has to be speculative to make the bank's money, which is the profit take moves. We never know how deep they're going to be, which again is why you find me getting out too soon, because I don't know when the banks are going to finish the profit take move. It could be a 38 retracement. It could be a 50 retracement. It could be a 61.8 retracement. I don't know. But if I've got profit there, I'll take it out in case it's a 38. I've no way of knowing. But that's why it happens. That's why the market moves like it does, because the banks and institutions are just pumping money in and out of each individual currency. Same reason as if you get a squeeze on one currency is quite often if you've got the US dollar, let's say Euro, US dollar, Aussie, New Zealand is a good example. They're having to they're having to sell the New Zealand dollar because a lot of their customers are wanting to pull money out of the New Zealand dollar because they didn't like what was going on with the interest rates and they want to put it somewhere else. So they put it in the Aussie because they're expecting an interest rate rise to come. And then at the same time, the Aussie has a positive interest rate and they say buy the Aussie dollar. So not only were the people pulling out of the New Zealand dollar buying the Aussie dollar, we then had a load of other people pulling money out of the US dollar and out of the pound to put it into the Aussie dollar because it had good news. So that makes the move twice as fast and twice as powerful. If you've got twice as many people long on a position, it's going to need to pull back twice as far. So even if it's a long, you usually get a bigger pullback on a bigger push. And that's the whole premise of the elastic band theory. The more longs you have, the faster the snapback has to be, because everybody that's long there is seeing their money dwindle as soon as that thing comes down. So they all start to sell at the same time. But there's an unlimited amount of money that can move every day in the banks and institutions, which is where we get ADR. When they've moved the banks and the institutions have moved the money, moved the currency a distance, its average daily range that this thing normally moves, they run out of money to do the transactions with because they've got a limited pot. Me sitting on my speculative desk with 100 million Aussie dollars, I've only got 100 million. When I've done 100 million, I can't do any more because I haven't got any more. So this is why we have an average daily range on each instrument, because there is only a certain amount of transactions that can happen in the market in a day before it becomes unprofitable for the banks to do it, which is why ADR works, which is why we measure everything in ADR rather than in pips, because everything's got a different movement based on its popularity. And that changes. The pound New Zealand used to be an ADR of 350. It's 186 at the moment because they're not as interested in this anymore. When they get interested in it again, because something happens in the pound, we suddenly manufacture something that everybody wants, more money will flood through the pound. Yeah. And ADR will pick up and the movement will become wider and broader. Yeah. But it's all the banks and it's all completely 100% unpredictable from a fundamental and a technical perspective, which is why everything that you see out there in a course that teaches you something is total rubbish. None of it works. The only thing that works is getting in and getting out. And you can't time getting in and getting out because you can't control this. So you get in when you see an instance that's happened in the past and you wait for the market to come into your level because you know that's what it always does. Look at this terrible trade on the pound New Zealand. Awful. Made a profit on it. Why? Because I knew they had to pull back. How far were they going to pull back? No idea. But that was my exit. I had an opportunity to make money and I took it. But I didn't know where it was going or how far. And it was an okay exit. I could have got a bit more if I'd have waited 2 weeks. I don't want to wait 2 weeks. I want to free this bad trade liquidity up and put it somewhere else. So that's why you get different levels of pullback. But you can never tell what they are, which is, again, why when you go and buy a course on trading Fibonacci, it will tell you that it will pull back to these levels. I can see that. How does that help me? Buy the 23, put your stop under the 50. But what if it does a 61.8? You're stopped out. Well, how does that help? Well, I buy at the 68 and put it under the 71. What if it does an A-shaped recovery? You get stopped out. Well, how does that help me? Useless, isn't it? Pointless. Nothing you learn will teach you how to predict the future. And that's the only way you can make money in this market. And as we can't do that, the only way you can make money in this market is by not putting a stop to lose money. And if you don't put a stop to lose money, you won't lose money. That's why the P&L looks like the P&L, because I get in when the market looks like it might do a profit take move, because that's what has to happen in the banks. Yeah. Think of it like a shop. If you're going to set up a shop and go and buy a load of stock, right, you're going to outlay £10,000 on stock for your shop. What have you got to do to make money? Sell. Yeah, you've bought it all. You've got to sell it. Banks do the same thing. If you've bought a load of currency, the only way you're going to make money on it is to sell it at a better price. So when it goes up, it's got to come down. The portion it comes down by is determined by how many orders need to be out and how many orders are long-term holds. Long-term holds will also come out at some point, which is why you get trends coming to an end, because all of the long-term hedging money, which is 1 to 3 month holds, will at some point come out. And again, if you look at a chart, you won't often find anything trending for 3 months. That trend there was depends what you class as a trend, doesn't it? I mean, that trend there was 2.5 months before it undid half of it. That trend there was roughly the same amount of time before it undid 3/4 of it. That push there was probably a little bit longer before it undid 71.9% of it, a Fibonacci level. Yeah, it's because there's stuff left in. We've bought all this lot, but we got a little pot here of this corporate that says he doesn't want to sell it yet. All right, we'll sell the rest, and his lot will go long on the next order. You don't really need to know about it, though. It doesn't matter, does it? How it works is, to some is important to know, to others they couldn't give a monkey's. What you need to know is it goes up and down, and the more it's gone down, the more likely it is to go up. That's literally all you need to know. So if you see something that's been going down for 3 days on the trot, buy it. And if you've got that wrong and it goes down for 3 more days on the trot, if you keep buying it, eventually it will go up and you'll make money. Just don't put risk in the market. That means when you get down to there, you've got 25% drawdown on your account. If you don't do that, you'll win. And that's what the EA is designed to do. Literally, all the EA does is go, I've seen this thing get extended so many times in the past. Every time it gets up there, I do the opposite. Yeah, that's all the EA is doing. Literally, it's taking orders for me automatically when that thing gets to those levels. And it just banks it when the market comes down. It doesn't put any order in there to say, if this isn't exactly right by 25 pips, make sure I make a loss of $300. That's ridiculous. That's what everyone teaches everybody else to do. And that's not what the banks are doing. The banks are just buying stuff and selling stuff. Yeah, they don't. But the banks have the power to move the market up and down. Their choice. If they want this thing to go down today, they will move it down, because they've got an unlimited pot of cash that they can do sales for all day long. As long as they've got more than everybody else, they will force it where they want it to go. Cannot help but make money. That's why the banking system exists. There you go, Virginia. Hopefully that was a good explanation. You have stated a few days ago that you are running this on RoboTrader, Forex on the VPS. What is the rough costs of what? Is it RoboTrader plus VPS along with the cost of the EAs? So this is Forex is the broker. My VPS provider is on here. VPS Forex Trader. That's my VPS provider. That's $30 a month, $20 a month. Not even that. If you just want to run one MT4, it's $18 a month. What do you mean? Yeah, and the EA is $99 if you want to use the market reversal alerts EA. Or you can do it manually. But if you do it manually, you don't need a VPS. Watch the bootcamp. Bootcamp explains everything. Everything I do is explained in the bootcamp. Yeah, so just if you watch that, that will explain how everything works, what I do. You can do it all manually. You can do it with any strategy that is mean reversion. Or you can use my strategy and automate it with my EA if you want to, but it's up to you. You can build your own EA, you can do whatever you want, but just if you want to position trade, obviously I've built everything for me to do what I want to do, the way that I make money, but it might not be the way that you want it done or you want to make money. So you can always just have your own version of anything built, obviously. But I just built my stuff and I sell my stuff because it's what I do. But watch the bootcamp. It will teach you everything I just said, basically, in that little bit there. Pound New Zealand 125. New Zealand dollar still getting kicked to death. So we're just coming up to resistance. What was I saying? Yeah, so everything I've just explained, all I do is I've not figured out, learned how the market moves, which is market structure, which is why I'm called the market structure trader, because that's what everything is about in trading. Whether you use a stop loss or you don't use a stop loss, you have to understand the movement of the thing that you're trying to make money out of. Because if you don't understand how this moves and why this moves, you can't anticipate the future. The only way to make money in any market is to anticipate the future, because when you buy or sell, there's a 50-50 chance of it going up and down. So you have to have on your side more chance of one of those things happening than the other to be able to make money. So if you can't time it because you're not in control of timing, the only thing you have available to you is direction. So you have to have something that gives you an idea of which direction it's going next. And whatever that may be is entirely up to you to use. You can use anything that is an oscillator, because oscillators measure movements up and down. But you've got to understand why it happens. And when you understand why it happens and the motivation behind it, it becomes easier and clearer. Yeah. If a bank has bought $100 million of something, the only way they can make money is to sell at least $80 million of that thing to move it back down again. You know that when it's gone up by a massive amount, if the banks are going to make money, which is their sole purpose, it has to do the opposite. So by using any tool that measures oscillation, you can always benefit, because what goes up must come down, as they say. And it is 100% true. And I can prove it to you on any chart, on any time frame, over and over and over again. But I will never be able to tell you when. I can tell you the likelihood of that doing that is that, but I cannot tell you when it's going to happen. It might happen today, it might happen tomorrow, it might happen next week, it might happen next month. But if it's gone up massively and it hasn't managed to do that yet, and they want to do it again, at some point, they've got to take profit on that bit and now that bit. And if they do it again, and then they've got to take profit on that bit, and that bit, so it's gone that far, that is going to be much faster. Elastic band theory. And this was all taught to me by somebody that identified the same thing. He used a stop loss and he did it very, very well, but he was way better at entries than I am. I'm not patient enough to wait. But that's my psychological thing, and you've got to identify your psychological thing that holds you back. 90% of the time, it's the stop loss. The psychological problem that you have is not wanting to take a loss. If you remove the loss, you remove the psychology. If you remove the psychology, you can't help but make money. Again, that's all taught in the bootcamp. All the things that go wrong in your trading are all caused by your psychology. You can do as many psychology courses and read as many psychology books as you like. If your brain is not geared for this industry, you cannot fix it. You can't change it. It's like going into a relationship with a partner. Yeah. You can't change them. They're who they are. If you can't adapt to them, ain't going to work, right? Remove them from the equation. There's no problem. Yeah. The psychology is the bit that you got to get rid of. And it's very hard to do it. Some people can change their psychology and the way they look at things. And they are the 3 to 5% of people that manage to make it with a stop. But 95% can't. This removes that. And this is just what the banks are doing. They're getting in and they're getting out. Yeah. And they get out with a loss as well. Yeah. I've taken a loss this morning on New Zealand dollar. CAD. Yeah. But I've not taken a full loss. I'm not just going to shut the thing because it's gone down here. It's coming back up here. I'm just going to make sure that if it goes a little bit further, it's not going to hurt me as much for a while. Don't have to take full losses and stuff just because it's gone the wrong way. I have your multi-time frame stochastic. What are the best settings for 1 and 5 minute? I don't know. I've never used it, Hannah. You're the one, are you? That multi-time frame stochastic indicator, I think I sell 2 of them a year. I don't know what the best settings are for 1 and 5 minute. And for a start, if you're trading 1 minute, you're just going to die. So stop it. I don't know. Honest answer. Go and test it. I don't know. I built that because I was at the time I built that. It was the first indicator I ever built, that multi-time frame stochastic. And it's because I couldn't find one. So I built my own. And I was trying to trade a strategy that used multi-time frame confluence. And that was one of the first things that kind of kicked in and went, that doesn't work. But it did work in theory, but it doesn't work in real world. Why doesn't that work? And that's what kind of kick-started my movement into this a lot of the time. Well, actually, no, it wasn't that, because I did that before. It was when I built the indicator, it kind of cemented it, I suppose. But there's nothing wrong with the indicator. The indicator does exactly what it says. Yeah, all indicators do. Yeah, the RSI. Yeah, absolutely brilliant. I love it. Stochastic, multi-time frame stochastics, fantastic at telling you when there's multiple time frames extended at the same time. That does its job absolutely brilliantly. That's what it does. It tells you the condition of multiple time frames in the market is that. In the same way as the RSI dashboard tells you that this Aussie dollar yen is extended on the 4-hour and the hourly time frame. That's what it's telling you. What are you going to do with that information? You know what I mean? This is telling you this condition is met. Now what do you do? This doesn't tell you that the Aussie dollar yen, in this case, is going to go up. What it tells you is it's gone down. It doesn't tell you any more than that. So my multi-time frame stochastic indicator tells you when there's lots of stochastics extended. You know that. And do you know why you know that? Because the chart will tell you that. The RSI is extended. I know that because this has done that. Does that mean it's going all the way back up there? Or does it mean it's going there? Or does it mean it's going there? No idea. All this tells me is that that's extended. Usually that happens. But to what degree, I don't know. So the bigger this gets, the more chance you've got of that. So if you want to take the best A+ setups in the world, wait for the 80-20 extensions, because you will get into much better trades. But you will, I don't even know if we've had an 80-20 this week, have we? You may not get one. We haven't had an 80. I mean, looking at this chart right now, this is going back to June. So this is the entire month of New Zealand dollar CAD. We haven't had one 80-20 extension on that. But when you get them, they're awesome. That's all indicators tell you, is what's happened in the past, don't they? Same as everything else. Market reverse alerts indicator, you know, my signal indicator is amazing at telling me when prices come down. I know that for 3 hours it came down. I don't need an indicator to tell me that. But what I do need is I don't need it, but what this does tell you is that there are more sellers than buyers in the market, because the last time we tried to sell, we didn't win. Now these guys that tried to sell there have actually got control. That's what the indicator tells you. This is why we wait for the reversal alerts before we get into the market. There you go, look, just into New Zealand dollar CAD. Because the buyers are now in control of the market. Because the last time we tried to get a sell order here, a buy order, we failed. And now we've taken that control back, basically. So it's just all it's doing. But it doesn't tell you whether this is going up or down. What it tells you is the buyers have taken control. How long have they got control for? Maybe 10 minutes, and then it will collapse back down there again. We don't know. But what we do know is if we are going to have half a chance of going in the direction we want to, now's the time to do it. It's a signal indicator. Condition, signal. Wait for the condition of the market to be right. Wait for the signal to tell you that there's a chance of the move starting. Get in, cross your fingers, and hope. If it doesn't work, deal with it. Very simple trading. Everything you explain as business, others call conspiracy to sell courses, the secret sauce. Yeah. But their business, Franco, if you think about it, is selling courses, isn't it? That's why they, you know, this is the thing. It's just a business to them. All these people that sell courses have done is tried trading, done a lot of courses, figured out it's not for them, but realized that they've spent $5,000 trying to learn this job, and they've realized either they don't like the job, they're no good at it, and they can't do it anymore. But they've now got a pool of information. So they pass that pool of information on with a ticket on it. And then you buy their pool of information. And then someone else will do that. It's all I've done. My stuff's just all out there for free, and I do this every day because I'm doing it anyway. I might as well do it on a live room because I'm here, I'm trading. I'm doing it live. You see every trade I take, everything, warts and all. I might as well just do it on here and help people out because I've been helped out tons of times by mentors in the past for free, and hopefully you lot get a load from me. But if I package up what I know and sell it for $1,000, within 48 hours of me selling that course to somebody, they will have packaged it up and put it on the internet for free. So what's the point in me setting up a business to try and sell information that's readily available on the internet? All I've done is compounded it into something that makes sense to me. Yeah. If I give that to you, is it going to make sense to you? None of the other courses you've bought have. So why would mine? It's all that happens. And then that's why I've got that video on the website. I've said about this video many times. I love it. It's such a good video. Even if I do say so myself. But it's that light bulb moment when you watch that video that hopefully everybody gets, is that you've just been buying the same thing over and over and over again. Nothing works. You can't predict the future. And this one won't work either. And there's so many of them. You get to a point where you just buy your 7th course and you go, what am I doing? Somebody posted in the Telegram group yesterday about Nirav's advert. Nirav's advert came up on the YouTube channel as they were watching the live room. Nirav's advert is, you know, the useless retail candlesticks advert. Yeah. This one. Right. So this guy sells a course for $2,000, right? Which says, you're using these crappy things. Mine are better because mine have got numbers inside them and little blocks to the side of them. But that, at the end of the day, is still a candlestick. Okay. This doesn't tell you any more information than that. Does it? Because that doesn't tell you any information about what's going to happen next. So why could that tell you more information than what's going to happen next? What he's saying is that when you get these big blocks at the bottom of these candlesticks, it's where there is an exhaustion point. Yeah. When you hit that button to go long there because there's an exhaustion point, and put your stop on under the low, what happened in this particular case? The only reason I know this because I know footprint charts inside out. So I know what his course is telling you. That is a buy point. Yeah. So you went long. What happened? You got stopped out and then it went up. He's teaching you exactly the same thing. Another way of looking at the same thing and putting an order in the market that will make you a loss. He's going to charge you £2,000 for having taught you what he learned from someone else, that he can't do it either. That is what courses are. Information packaged, repackaged, 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 and you just keep buying the same thing over and over again. And all it does is it teaches you that you can't predict the future. Literally all you're buying. Yeah. All you need is a good set of indicators and a good EA and a knowledge of how this thing works, and the knowledge that if you put a 1% risk on a trade, the high likelihood is in 90 days, your account will be 90% lighter than it was when you started. If you put a tiny little risk on every trade and get it wrong, at least you got a way of getting out of it really easily because the market goes up and down and all you've got to do is wait. Everything teaches you about trying to get in with that sniper entry and get in, out, in, out, in, out. I just done it this morning on the Dow, just lost $2,000 because you used stop loss. I will make good money out of these prop accounts in a year, but I will blow loads of them because I can't predict what's going to happen in the future. I thought the Dow was going up today. It didn't. It went down. I've stopped out both of these today. Yeah, because I couldn't predict the Dow was going to go into range today. Lost money. Why? I didn't lose money because I didn't know which way the Dow was going or the DAX was going. I lost money because I put an order in the market to say, if the market goes up and down, make me $1,500 lighter, please. That's why I lost money. I still don't know whether this is going up or down today. But if I'd have gone short there, not used that order, and it had gone up and come back down again, I could have got out there with no loss. But what I decided to do was take $650 out of my account by placing an order with my broker to say, when I get there, please remove $650 from my account. And this is my product that I use on a daily basis. Yeah. But I know there's a long-term edge in this because the days that happen like this will be completely outweighed by the days that go like that. Yeah. These 7 grand days, when I get the odd 2 grand, 3 grand losing day, they are way, way, way outweighed by the 3, 5, 7, 10K days. So it doesn't matter. This is just a part of using stop losses. And this is, again, what's taught in the bootcamp. This is what drives you nuts. This is why you buy the opening range breakout EA, you use it for 2 weeks, it loses 6 grand in 2 weeks, and you go, screw that, throw it away. I'm not using that. I'm going to go and buy someone else's course. And then what happens the day after you stop using the opening range breakout EA? You get a 200% ADR vertical move that would have made you 25 grand. Does the ORBA work? Yes. Does the strategy work? Yes. Have you got to be patient? Yes. Have you got it? No. Psychology. Remove the psychology. You make money. Simple. Simples. Franco, first book I read on markets, How to Make $1 Million in the Stock Market, 1965. Best 65 cents ever spent. Yeah. One of the best books you'll read as well. I haven't got it on my desk. It normally is. Trading in the Zone by Mark Douglas. TITS, it's known as in the industry. Trading in the Zone, TITS. Yeah. Trading in the Zone. Mark Douglas, he's dead now, unfortunately. But best psychology book you'll ever read on trading. So he's a very renowned trader and massively impactful book. Everybody needs to read Trading in the Zone by Mark Douglas. But what it will teach you is that trading has got nothing to do with anything you see in front of you. It's to do with the psychology of being able to accept losses. Yeah, that's basically it. And if you can't accept losses, you can't do this job in the way that typically you are taught to do it, because your psychology cannot be changed. People, if there's anybody's watched Billions, yeah, the TV show Billions about a trading company, they employ a psychologist to get the traders in and work on them constantly. She's paid millions and millions to try and keep these traders' psychology under wraps. And all the banks and institutions have them as well. They have chill out zones where you can go and sit down with a psychologist in closed rooms and talk about anything you like, to make sure that everything is lifted away from you and your mind is 100% focused on what you're doing, because it's the most important part of trading. But it's the one thing we can't do, isn't it? So, and the only thing that triggers you as a trader is losing money. I'm not triggered by that today, because this afternoon the Dow's going to go like that and it's going to make me 3.5 grand. I don't know if it is or not, but that's my mentality. That's done, dusted, whatever. I've seen these days over and over again. Nothing you can do about them. But on to the next, tomorrow. Yeah, so the ORB strategy I know has got a long-term edge. Short-term, it's going to lose, which is why I position trade, because I hate being stopped out. As does most people. And you've made $1 million. No, rupees. This is the thing, right? Again, we're going just talking about the education side of things, right? Franco's read that book on how to make $1 million in the stock market. Probably hasn't made $1 million out of the stock market. I have no idea how many books on trading. probably getting on for 50 plus ebooks and physical books. It makes me incredibly knowledgeable. Yeah, that's what it makes me. Does it make me a good trader? It makes you very clever. And I could take everything I've learned in all of those books and package it up into a course and sell it for $1,000, and it would be a massive amount of information. But would it make the person that buys that course a good trader? No, it makes them incredibly knowledgeable now. I can sell a course on candlesticks telling you that when you see one of those big wick candlesticks, you want to be buying it. Yeah. Will that work every time? No. But does it make you understand that wicks is where the sellers are running out of steam and the buyers are taking control of the market? Yes. Does it mean the market's going to go up? No. It makes you intelligent enough to identify a candlestick pattern. When you get a reversal alert, it shows you that the buyers are in control of the market. That's what it means. Doesn't mean it's not going to go down. It just means that right now it's going up. Yeah. So information and ability to do something are totally separate things. Again, trading in the zone teaches you that. Talked about the other day, the Flawed documentary on YouTube. Go and watch that. Those guys walking into the pits. Not a clue. They walked into the pits and went, that guy's buying Amazon. Buying Amazon. Yeah, they did what he did. Did they know Amazon was going up? No. But they knew that if they bought it and it did go up and they sold it, they made money. They had no clue about stocks, business, or anything, but they knew how to make money by buying something and selling something. They knew when to sell it. They knew if they heard a load of people suddenly selling Amazon, they'd be like, I'll get out. That's the psychological part. Those guys in the pits had the psychology and the ability to accept losses, and that's what it's all about. If you look at Tom Hugard's book as well, just talks about taking loss. That's what you got to do. If you're using big stakes, but if you're not using big stakes, do it the way the banks do. It's much easier. That's why I do it this way, because it's easier. I'm a lazy trader. I should call myself the lazy trader. I can't be asked to learn anymore. I just want to make money. Trading in the zones, need to read it again. Read it when I was thinking of trading, but now I have been trading. I think it'd be more useful. Yeah, go and revisit stuff you've... also, go and revisit courses that you've done in the past. If you've bought people's courses, go and revisit them now you've watched what I've put out there, because it will give you a very different view. If you've done there's a really good course on Bollinger Band strategy, yeah, which I actually made money out of with a stop loss in indices, and it was something I was really invested in for a good 3 or 4 months because it was working and I could see it working. And then I started tweaking it and changing it, and then I thought, it's not going to do any more than it does. And the problem I had was it only made 1.5 R. Actually, no, it made 1.2 R. It wasn't enough for me. So I went and moved on because I thought I was something better than that out there, surely. So I went out and did other stuff. Going back to revisit that now, this is exactly what I'm doing now. Exactly what I'm doing now, except I've decided not to use Bollinger Bands. I've decided to use the Relative Strength Index. But the concept of this RSI strategy that I use and the Bollinger Band strategy that I had are exactly the same. It worked beautifully with a 1.2 R. Yeah. But it failed around about 55%, about 45% of the time. So it had a slight positive strike rate with a slight positive R, which made money. Yeah. If I had decided not to use a stop loss on that Bollinger Band strategy, it would be a fantastic position trading strategy in the same way as the RSI is. And if you put a Bollinger Band on this right now, I think you'll probably find that that was a Bollinger Band entry, and that was a second Bollinger Band entry, and that is probably a 1.2 R on the entire position. The same thing, same course, same thing. It's just teaching you how the market moves. Bollinger Bands mean reversion, CCI mean reversion, MACD mean reversion, RSI mean reversion, stochastic mean reversion. Anything that is mean reversion works as a position trading strategy. So go and revisit stuff you've learned. If you get on with this, fine, buy my EA, it's $99, does it all for you. You haven't got to worry about it. If you don't get on with this, you don't like this, Go and revisit other strategies that are mean reversion based, not breakout, not trend, but mean reversion. Adapt them, remove the stop, scale in a half to 3/4 of an ADR apart, test it. You'll be amazed. It will convert any losing strategy into a winning strategy by removing the stop and reducing the risk. Reduce the risk by 75%. Remove the stop. You'll be amazed what you find. So if you found a strategy in the past that you bought or whatever, and you thought, I loved it, it was great, but I just couldn't make it work, go back and turn it into a position trading strategy. Really, really will help. Because you've got to have faith in the strategy that you're trading. That's the problem people find with the way that I do it, because they're worried they don't get this way of doing it. And you've got to be comfortable with what you're trading. Trading for a Living by Alexander Elder. That's one I've not heard of. Doctor. Anybody with a doctor in front of their name is worth listening to. 1993. Yeah, I mean, any book. This book is definitely outdated. Don't read reviews. There's another version there. A study guide. But yeah, any book you read is going to add to your knowledge, but don't expect to find any book that will teach you anything that is going to make you a good trader. You've done that. You've been through the courses. You've bought loads of courses. You've done loads of courses. You've watched loads of YouTube videos. If you still can't do it, it's not because of the course strategy. It's because of the way that your mindset is set up. And if you can use a strategy that doesn't rely on a mindset of loss making, you will suddenly make it. That's what it happens. This is what the position trading bootcamp is all about, teaching you this is how the banks and institutions work. As long as you can understand that, you know how they work. Yeah. One of the best ways to set up a business is to copy a business that is successful. Who are the most successful traders on the planet? The banks. What do? They get in and out of swings. What do? We get in and out of swings. What don't they use? Stops. Just copy the most successful guys, and that's the way to make money. Yeah. Don't copy trade, obviously. That's a load of rubbish. But copy the things that successful people, successful businesses do. That's the way to make money in the market. Dow absolutely collapsed today, so I'm glad I got stopped out on my futures contract, because that would have been approximately $25,000 worth of loss, which I didn't want to take. That's the beauty of Top Step. I come back tomorrow or Monday and I just go, right, have another go. I just over leveraged this morning because I wanted a pass. Today would have been the pass, unfortunately, but never mind. It set me back $2,000. I can make $3,000 on Monday and then make another 1,500 on Tuesday, and that's over the line. So DAX today, absolute waste of time. Haven't even done the gap fill yet. Look, so market's really not interested. I'm not quite sure why it's not interested either. I can't see that we're waiting around for anything today. So just a bit of a quiet day, unfortunately. But I'll be back this afternoon at 2:20, and we'll have a look at the US markets. Obviously, watch what's going on today with these RSIs. We've got quite a few RSI extensions today. You've got loads of ADRs today. I'm not in any yen yet. I might get into a yen today, but we'll see. The main focus for me is watching this euro, basically, and hoping that we get this euro Swiss push. It's pulling back a little bit at the moment, but oops, that's okay. So we've broken the high. So we've got low, high, higher low, higher high, higher low, higher high. Yeah, again, banks moving in, moving out, moving in, moving out, moving in, moving out. Just banks buying and selling stuff. They're buying more than they're selling, which is why the price is going up. So yeah, see if that continues. Okay, I'll be back this afternoon, 2:20, if not Monday morning, for the Frankfurt session. Yeah, back 220 this afternoon. Be aware of the news this afternoon, 1:30. Obviously, we've got the the GDP for the Canadian dollar and PCE for the US. And then aftermarket, when we're online, will be here for the Michigan revised sentiment, which probably won't do anything. So, all right, have a good one. Anything you need, let me know. I'll be in Telegram. Otherwise, I'll see you guys later.